Hey, what's up everybody? Jeff Beers here from the 40 Finance channel. Today I'm going to take a look, comb through some stocks that have went through the correction here recently and try to identify which ones I personally think have the opportunity for short-term gains. Now, of course, this is just my opinion. You should seek your own professional investing advice and do your own research. The purpose of this video is just to show you how I'm thinking about things during this correction time. And hey, don't forget, if you like stock market analysis, investing ideas, and personal finance videos, then please subscribe to the 40 Finance channel. Alright, so I'm going to lay out some selection criteria here because I know everybody's in the weeds on what numbers I use for this or that, and that's fine, but this is for entertainment purposes. That being said, I'm still going to throw out some target criteria. I'm trying to find stocks that I think will grow plus 25% or more before the beginning of the year 2021, right? So I guess all the way through December 31st of 2020. I'm looking for stocks that have been in a 25% or more correction between the dates of February 18th to March 12th. Next, I'm looking for stocks that have a reasonable chance to bounce back quickly after the healthcare scare blows over. So, you know, trying to avoid things like retail, tourism, travel, stuff like that. I think they have a much longer road to go. And I just want to focus on stuff that is not as virus dependent, so to speak, so that when the storm does pass, they can hop up very quickly. And don't forget, because the stock market's always fluctuating, very well could have to sell these stocks before December 31st to lock in the plus 25% or more gains, right? So we don't know what the world's going to look like 9 months from now. We could have a strong peak in October with one of these stocks, and I think that's when I would be watching to say, okay, well, I'm back. I got my plus 25, plus 30% return on this stock. I knew it was a short-term investment. I'm going to sell now and lock in my profits. If you don't do that, or don't set a target in the short term, then you could very well find yourself at the end of the year in December with some other catastrophe that drags everything back down again. So having a target on when you would sell makes a lot of sense in the short term. All right, first up on the list today is Uber Technologies, current price of $22.60. The stock has seen a minus 41% correction between February 8th and March 12th. No current PE with Uber. I've talked about this in another video. They were projecting to hit profitability by the end of 2020. Obviously, things might have got pushed back. And my projection on Uber, it's just a little different than a travel stock where people are going, you know, in airplanes, hotels, etc. Obviously, they're going to be impacted by the fact that the streets are more empty than usual. But I think when things do come back, or, you know, work gets back online, I think that their revenue jumps back up pretty quickly. How bad will the downtime affect the company's future? I would say very little, just because of the way that they've set it up, right? It's somebody else's car, somebody else driving it. They really don't have a lot of physical assets, so when the market's ready to use more Ubers, they're pretty much ready to go too. And using some simple math, if we wanted to get to 25-30%, we need to add, you know, about $6 to this price. So we need to get to about $28, $29, somewhere in there. Uber has a 52-week range between $21.73 and $47.08. But you can see here, even on the short term, this is a 1-month chart. Wasn't too long ago that they were $44, right, before all this. So, and we really only needed to go up to around $29.30 to make a nice return in the short term. So bottom line, I think there's potential here. Looking at the TipRanks dashboard, which projects up to 12 months out for these prices, so that doesn't necessarily fit our criteria, right, of before the end of 2020, but just to get a feel of the best performing analysts, you know, right now we got 19 buys, 2 holds on Uber, median price target of $49.94. That's 120% upside from where we are today. So generally speaking, analysts are bullish about this stock, and I think it bounces back quicker than average if we're lucky enough to see some of this stuff pass over. All right, next on the board today is the Trade Desk, and the Trade Desk is basically a digital marketing platform that also integrates with this new streaming television advertising. It allows digital marketers to purchase inventory and ad space from anywhere in the world, right from their computer. Great play nowadays when we're all sort of working from home. And with the Trade Desk, it's been a pretty sexy stock over the past 18 months or so, arguably run up way too high prior to the correction, but now we're starting to see some things. It's down 39% between February 18th and March 12th. We got a current price of $200, P ratio of 88, and the 52-week range goes from 173 all the way up to 323. So getting back to the 300s here isn't impossible if you consider that the majority of Trade Desk operations relatively unaffected by this. I'm sure them not having access to employees and office and meetings and sales opportunities has certainly hurt, but the core operation of the units should not go awry in this current health scare. And just doing some ballpark math, we're at 200, so we need to get in the neighborhood of $250, $260 prior to the end of this year. I look back, this is a 1-month chart before all the stuff that came out. You know, we're riding about 317. Don't really expect it to go back to most recent highs. We don't need it to hit 25-30% gain in the current environment. Just need to get to that 250, 260 level, and I definitely think it's possible. All right, on the tip range side of things, we got 5 buys, 1 hold, median price target of $295. Got a high bar of 330 and a low of 200. So generally speaking, analysts are still bullish. We still have the buy ratings. TipRanks does a very good job of updating analyst picks. So I tried to make sure that the stocks on the board today had refreshed ratings from the past 7 days, and Trade Desk is certainly in there. So this is not necessarily old news. And the bottom line here is I think they're in the right industry. I think they've had the right amount of price cut, and I think the opportunity to get a quick return is there. All right, next on the board today is the company Roku, ticker symbol ROKU. This TV here is a Roku TV. You can look it up. Roku is basically like the dashboard of everything streaming, and it's very useful, very helpful in today's day of streaming access services, and it's grown quite popular and recently has seen a spike in the advertising side that they bake into these streaming channels across the Roku dashboard. Now, similar to Trade Desk, Roku had investors all enamored, okay? Over the past 12 months, their stock ran way up. Wouldn't have touched it with a 10-foot pole, say a year ago, because it was just too hot. But now we're starting to see the price come down. They already had like a mixed earnings report prior to the health scares, and now we're seeing that the health scares have kicked in. People are leaving the market. Between Feb 18 and March 12th, we're down 37%. And now all of a sudden, I'm kind of interested from a short-term standpoint. It's important to note that Roku does not have a PE, and I don't think is projected to be profitable until 2021, and those plans may even be pushed back now. But we do have a 52-week range of $55 to $176. So it's definitely been a high flyer in the past. And right now, with the price at $80, we need to get somewhere in the neighborhood of 105 to 110. And prior to the health scare and the market crash, it was trading well over 120, looks like about 130. So I think the 105 target, 110 target is definitely in grasp. It probably will occur closer to Q3, Q4 for a company like Roku if you get into seasonal shopping and demand for their services. This one could take a little longer to hit my plus 25% projection, but I definitely think it will do it before December 31st. All right, on the tip range side of things, we got a a moderate buy with 6 buys, 2 holds. I did go back and look at the analyst dates for these. The 2 holds were in the past, approximately 30 days ago, coming off of their week earnings report. But nonetheless, you put all these top performing analysts together, you got a 154.29 median price target. It's plus 90% from today. High bar of 200, low bar of 60. Again, I wouldn't say Roku is a lock to hit some of these numbers, but from a plus 25, plus 30% standpoint, I definitely think that they can pull it off, and they have the right technology, the right industry, especially in a time where people could be holed up for a while, to make this tragedy that we're going through right now sort of work in their favor from an ad dollars perspective. All right, next on the list is a little bit boring, but I still think it has good potential, and that is Facebook. Okay, I have not seen a lot of people talk about Facebook during this crash. I've seen a lot of people focus on Microsoft and Apple. You're not going to see too much out of me on Apple just because I don't like the Chinese manufacturing component. I'm a little nervous about that. And then retail stores are closing, and that's, you know, whatever. That's a side take for me. Apple, I don't think is a shining star yet here today. I would actually take Facebook over Apple as we jump into Facebook here. They are down 29% between February 18th and March 12th. We have a 52-week range of $154 to $224. You got a P ratio of 26.48. You got hordes of cash. You're in an internet social media area that frankly, you're going to have more problems trying to keep all the fake news out of your platform than you are going to have to worry about, you know, traffic or generating revenue. But Facebook is one of those companies that everybody can work from home, right? It's all developers, it's all people scanning content, and the ad platform that advertisers use, which I've used quite a bit. I mean, I use that from my desk, right? So I don't have to talk to anyone at Facebook. So I really like the match here, and I think you're beaten up, obviously, on the health concerns, and that means that there's some opportunity for a short win. All right, so we need to add somewhere between $35 and $41 to the stock price to be a win. Let's just say it's 41. That puts us at 211. Facebook prior to the dip here was trading in the neighborhood of 220, 225. So again, it's not necessarily an easy road to plus 25 it, but at the same token, I see that there are relatively small disruptions on their end from the health scare. So I'm just going to assume that they have the ability to roll up revenue through the year and make a bullish case prior to the end of 2020. All right, on the tip rank side of things, we have 28 buys and 2 holds, median price target of $254.46. That's plus 50% from today. High bar of 300 and a low of 200. So you start to get the feeling here as you look through this, you feel like, you know, some of the stuff on the video should be easy, right? Plus 25% in a market like this, it's already taken a haircut. Problem is, guys, we were so high from stock prices and PE ratios that to really get in here and start talking about the short term, like I need plus 25% by the end of the year today, even a company like Facebook, it's still going to be a little bit of a nail biter, and it's going to make the assumption that the sickness that's going on passes over, you know, maybe by Memorial Day. I don't know that part, but we're definitely going to need a solid chunk of summertime and hopefully into Q4 where everybody's healthy so that these companies' revenues can get back online. Otherwise, that plus 25% I'm talking about in here prior to the end of the year is risky. Now, from a long-term standpoint, no, we don't have to worry about risk with a company like Facebook. I mean, every stock has risk, but if you're holding it for 5 years, I feel pretty good about it. All right, last on my list is actually way out of my comfort zone and not something I normally invest in, but I'm intrigued by the thought. Ally Financial is a 100% online banking company. They do online checkings accounts, savings accounts. I have an online savings account with Ally. I actually also use them for my retail brokerage account. So Ally has a lot of online plays to make it very easy to sign up from your computer. And my thought process here is sort of twofold. One is people are more intrigued with the thought of savings accounts instead of the stock market as a whole. If you take all of America, they're going to feel better about savings accounts. And it's annoying to go to a bank branch. So I see Ally signups have the potential to be strong in this period of uncertainty. And I also think that Ally's been beaten down here a little bit, even though the fundamentals aren't that bad. So a combination of an internet banking company doing good in this particular time frame, combined with the fact that the stock, like so many others, has taken a pretty big hit. That's why Ally's on the board. They're down 40% between Feb 18 and March 12th. We have a 52-week range of $18.58 up to $35. And you see on the board that $35, this is a 1-month chart, that $35 wasn't very long ago. And now we're trading down to $20.56. So, you know, to get plus 30% on a stock like this, you only need to add $6. So that's, you know, let's just say we got to get to $27 before the end of the year. I feel pretty good knowing what I personally know about Ally and how easy it is to use and how reliable it's been for me. Will they launch the initiatives to take advantage of signups at a time like this? I'm not sure, but I like where the price is today and the potential for wins in the future. All right, on the tip rank side of things, keep in mind this is a bank, so best performing analysts are going to treat banks a little bit differently than a high growth company. We've only got 2 buys and 4 holds. So the holds being, and this is pretty true across financial sector right now, like, hey, let's just wait and see how this virus thing shakes out. But even amongst those holds, you still have a median price target of 34.17. Okay, you got a high bar of 37 and a low of 30. I think Ally is a pretty safe play. I don't play banks typically, and to be honest with you, I haven't studied them enough to say like these are some of the best metrics you'll see out of banks. I think we all know the big ones, but you know what, at this price point for a short-term gain, you don't really need a lot of things to shake out in your advantage. I also forgot to point out on the slide before that Ally pays a 3.67% dividend. So outside of stock appreciation, you'd probably sneak in for a couple quarters of dividends, even if you were planning to sell in the short term. All right, guys, so that's my opinion. 5 stocks that I think can bounce back faster than the rest, trying to get plus 25, plus 30% returns on these. Again, we don't have to get back necessarily to where these stocks were to make money in the short term. You just have to get at the lowest point and then hope to get plus 25, plus 30. You can take more risks in the short term with a company like, let's say, Roku. You don't need them to last for 10 years necessarily. It's just, do you believe they can bring value to their customers here and this year and then get out for something else? Just to be clear, I'm much more of a long-term investor. I am not getting into short plays right now. I'm building my foundation for the long term. However, part of the videos I do here, I'm always looking at different angles to share information with everybody. Hope you guys enjoyed it. Please give me a like and subscribe if you enjoy stock market content. I'll see you on the next video.